All right, we will bring you a market update through our conversation with Kyle Burgess. He is a portfolio manager at Nedbank Private Wealth. Kyle, happy Friday and thanks so much for your time.
Good to see you on this chilly Friday.
Yeah, it is chilly actually. I had packed all my winter stuff away, but this morning I had to come and get some of the stuff out. But nonetheless, Kyle, Zimbabwe, it continues to be the main story here. Interesting performance that its stock exchange does well when times are bad, but doesn't do well when times look like they're getting better with the transition of a new government possibly there.
Yeah, so I think it's really got to do with a lot of uncertainty that's around. So, well, at the moment, President Mugabe hasn't decided to step down. I mean, who would have thought? He has been in power for 37 years and, has been accused of rigging elections and things like that to stay in power. So probably not much of a surprise that he's kind of holding on to power at the moment. But there's also a lot of uncertainty as to who's going to take over. So at the moment, it's almost like the devil that is in power and what's going to happen next. At the end of the day, we must also remember that this is, for everything in name, it's a coup, really. So, except everyone that, seems to be saying that it's not a coup. So, yeah, we're certainly watching it very closely. It's, as we discussed earlier in the studio, it's certainly history taking place.
Yeah, we're living in the middle of history. But, Kyle, bringing it back home, good day for JSE, it seems.
Yeah, so a good day. Overnight, we had the US dollar that was a bit weaker, so the rand's looking a little bit stronger, which has helped our retailers. So retailers have been sold off for quite some time now, on the back of a weakening rand. So that's given the market some impetus to rise. And then, of course, Tencent released results, which has driven Naspers. It was up 1.5% yesterday and up a further 3.5% today to well over 3,800 rand per share, which is quite incredible. So yeah, certainly, it does help in the week on a high. We're just above 60,000 if memory serves. So all pretty good. I think it's just really resource stocks that aren't looking so good, particularly platinum miners and gold stocks that have been sold off a little bit. But barring that, a fairly good week on the markets.
I actually saw a headline that Naspers has outgrown the market. I mean, everybody's waiting for that run to somehow stall or unwind, but it doesn't look like it's happening.
Yeah, so I mean, if Tencent continues to deliver such fantastic results, and if you go through those results, and what's quite astounding is the amount of sort of businesses or games that are grossing and increasing revenue by more than 60%, which is quite something. So if you take that into perspective, I mean if we were looking at Naspers at 1,800 rand a share and you thought it was expensive then, a year down the track, it actually looks probably in terms of value like you're getting more value if you're buying Naspers. So at some point, we're already getting very close to 30% of the market. So at some point, if they look at a possible listing somewhere else, that could sort of alleviate, I suppose, being a big fish in a small pond. But incredible. If you are owner of the stock, it's been incredible. And if you don't own the stock, it's been very difficult to keep up with the market.
Certainly. You did mention that retailers were rebounding. I saw that SPAR is looking good. They did have their results earlier on this week, and that buying momentum has continued. Woolworths, not so much. But what's your stock pick in that complex?
So, we've actually seen quite a few of the big international banks upgrading a lot of the retailers. So I quite like Truist and Foschini's, very cash generative businesses, and they pay nice dividends. I must be honest, I do like Woolies in the sector. I think if you had to give it an overall pick, I think you might have to wait a bit longer for a re-rating. But I like the Australian story, and I like that the levers that they can pull in Australia. I think that there's certainly some upside potential certainly from these levels. So I'd probably go with Woolies in the sector at the moment.
Wow, all right. And then Brait also out with its numbers, and investors were not happy when they were released. They continue to not be happy because that share price is still under pressure. Yeah,
so at the moment it's trading at about 45 or 46 rand a share. So NAV at the moment is around 66 rand. So you're looking at roughly a 30% discount to NAV at the moment. Given the fact that they have discounted New Look to zero, you would think that they'd we've said this before, and it's come down, more than 10%. So hopefully that the losses will sort of abate at the moment. But it does seem to look fairly attractive from these levels. Premier didn't have such a great performance. Virgin Active looks a lot better at the moment. At the moment they've got.
I think it's due to me because I'm there every day.
Well, I'm glad. Keep going to gym. So they've closed some of their underperforming gyms, and they've really concentrated those around London. They have opened up some some new stores, new gyms in Asia, which seem to be performing well. So it's really more of a high-end gym at the moment, which is great, and it seems to be performing well. So I think keep your eye on that going forward, because hopefully most of the bad news has been priced in.
And your take on Mediclinic, I mean, is this a stock that you continue to hold, even with the problems that they're facing in Switzerland and still a bit of pressure there in the Middle East?
Yeah, so, and unfortunately, the Middle East hasn't been the growth space that they thought it would be. They've, incurred huge losses in terms of the share price from the underperformance of that, but it is certainly still a growth area in terms of sort of medical penetration in that market. So I like it from that perspective. I like the fact that it's obviously got the SA exposure, which has performed fairly well, and then of course in Switzerland. So in terms of the sector itself, I do still like the stock. I think in the broader industry in general, all of the stocks have been sold off. So life, healthcare, Netcare, maybe Mediclinic to sort of Netcare actually probably to a larger extent because of its proportionately larger operations in the UK. But I still like the stock. I still like the sector in general. So we still continue to hold the stock, and we'll see how it performs going forward. So hopefully second half of 2018 will look a bit better from UAE.
Hopefully. What about the oil price? I mean, what view are you taking on that? I must say I'm pretty pleased that we're not seeing a creep any higher. I was getting worried there, especially with what the rand is doing.
So I think, I think it will probably be fairly stable at around $60. I can't see it going back to sort of like $80 or $100. And again, I can't really see it coming back down to $40. We've got some uncertainty in the Middle East at the moment, which is keeping potential supplies on track. And then, of course, supply in the US, which is really been bubbling. So I think it will be stable. But there's so much going on politically, and specifically around the Middle East. We've also got a lot happening in the US. We've got global growth that's starting to really come online quite nicely. Hopefully, with Trump's tax cuts, we'll see some additional growth in the US. So there's really a lot of factors, I think, that go into determining the oil price. So I'm hoping that it'll stick at around $60, and I'm sure a lot of Sasol shareholders will also be hoping that.
And the BE shareholders.
Correct. So certainly keeping my eye on it, but I can't see it re-rating hugely, to be honest.
Well, Kyle, we'll leave it there. Have a great weekend. Hopefully the weather changes, I must say. So. Yeah. Thanks so much. That was Kyle Burgess, who's a portfolio manager at Nedbank Private Wealth.